Hey, good morning, everybody. Welcome to Trendy Trading. Today, let's go ahead and start with our broad market analysis. Now, as far as the calendar is concerned, we will be talking about the 10th through the 14th. Again, futures open tonight, and I'm still on the fence whether or not I will trade futures tonight, but obviously I will put some charts out for you guys here at Trendy Trading. Let's go ahead and get started with the SPYs. Then we'll look at the Qs, the DIA, the IWM, a little bit of gold, and then I wanted to touch up on some notes today, also going over the 10-year Treasury, which is the TNX, and then we'll look at the dollar, the SKU, and then the VIX, and then the fear and greed, and then I'll give you my overall sentiment on each one of these charts going forward. All right, so we have the SPY, so let's look at the layout. We have the weekly on the left, then we have the daily, and then over here on the right-hand side, we have Trading View to give you that bigger picture look. So I don't want you to get confused here. Sometimes when you can't see things to the left, you're kind of uncertain or feel like maybe you need to see the bigger picture. Again, we use what's called the neutral strategy. We did make a video out there on YouTube. Please go over there and watch that. That gives you the details of how we trade this. So really at the end of the day, I'm just going to give you my sentiment, the targets to the upside and the targets to the downside. Now, the reason why we do this is simple. If price breaks over the top of that neutral, then I am long biased and I'm trimming into those upper targets and pulling my stops up. If for some reason we break down below that neutral, I'm going short into those targets, trimming and bringing those stops down. I'm very unbiased going into this week specifically, as I feel we are getting set up for a neutral. We have been selling off for quite some time. It feels a little extended, but there is a little bit of room before we find some support. Let's go ahead and get started. All right, so our numbers here for the SPY is going to be 466.56 is that trigger for me to go long and possibly looking for 469. If for some reason we break below 462.06, I'm looking to go short into 459.85. Now, what it prices in the neutral, honestly, I don't need to do anything. I stay very patient. I could sell some call credit spreads or put credit spreads, but in most cases, I'll just leave it alone until price makes a decision on where it wants to trade out of. Now, one thing I do want to put out there, and I think it's very important, is that on the weekly, on the SPY, we came right into the 9 EMA, and notice that we bounced there. All right towards the end of Friday. So this is a very important level. I've been over this several times in 2021. Matter of fact, the rate here, every time we hit this, it was a huge buying opportunity. The longest we ever stayed in this cloud, this 9 EMA cloud, was back here, and you could see that it was about 1, 2, 3, almost 4 weeks that we stayed in here. But looking at the rest of 2021, you could see that that line or that EMA was an awesome opportunity for bulls to go long. Okay, so I just want to bring that out there. Now, I'm not saying 2022 will be the same, but probabilities do suggest that we did come into support on Friday. My overall sentiment for the SPY is going to be neutral, and again, trading the neutral strategy specifically. Over here on the right hand side, please note that we're just, in this channel and things look really good. We basically broke below this mid level. Okay, and as long as we stay below there, that is resistance around 476.88, and we currently came right into the support level, so we're kind of stuck there in a neutral stance, really. All right, so if we break down, look at that bottom rail. So potentially somewhere around the 455 level is possible, and if you look over here on the left, you'll see that we have targets around 457 to 454. Let's go ahead and move into the QQQ. And we'll go ahead and type it for now, actually, just right here. All right, so the Qs, same thing here, a little bit different. Notice you're seeing a lot of red boxes. Remember, guys, this is my overall trend for this pops up using Fibonacci levels and so forth. And so it's letting me know, looking back, that we are in a bearish trend. And you can see this one's a little bit different than the SPY. We're actually in the cloud, and any time that prices in the cloud, whether it be a weekly, a monthly, even a daily, and smaller time frames, it's not an easy trade. Specifically, you will find a lot of chop in the cloud. Okay, so I want to point that out for sure. Notice that we have lower highs. Okay, but we have higher lows. This is really a sideways trend, leaving me at the sentiment of being neutral once again. When I look over here on the daily, I feel like it's a little extended, and really at the end of the day, the best opportunity to buy, and this would go for any stock, especially when it's in a range, is down here lower on the curve. Notice how price keeps coming into here, and then we get this nice push up. So this is considered lower on the curve, and I would expect some support in here. Up here is higher on the curve. You could draw a line, and anytime we come up into these levels, I would be looking for that to be resistance until proven otherwise. Notice the chart here is 380 by 376. If we start to break above 380.85, I'm looking for a long into the numbers that I have annotated here, and I would pull those stops up. To the downside, of course, if we break below 376, looking for a move down towards 373.66. Let's go ahead and look at it on TradingView. This is what I have. This is the chart that I've put out for our members here for the last several weeks. And what I wanted to do is identify an inside and up. And that inside and up is around 365. We did break here, this trend line. And as long as we stay below that trend line at around 385.32 or so, you could see price continue to move down towards this inside and up, again around 366. Okay, so current price again is sitting at or around 379. You can also see that we do have targets towards that level of that inside and up around 369 to 365.76. My overall sentiment again is neutral. It feels a little extended. There's a little divergence between the cloud and current price, which really at the end of the day is setting up for a nice range. They're putting in nice range, I should say. So buying the dip here, and if support holds, we should have a nice little run up into some targets. We're also starting out with some earnings this week, so please pay attention to those names. And we do have some banks coming in at the end of the week. All right, so let's go ahead and look at DIA. All right, that's going to be your diamonds or the Dow Jones. Again, very straightforward. We have a topping wick here. Again, go to my YouTube page at Trendy Trading. We talk about topping wicks and why it's very important to identify these. Basically, we have a lot of selling pressure coming in. And as long as there's selling pressure here, this lets me know that the bears are in control. Basically, they've built a wall here. All right, and so we're trading within this range. Notice my top neutral and my lower neutral. Again, I'm only interested in going long if we get above that 364.25 into 365.86 and 367. One note to say, I should go back on that, is that I won't necessarily only go long if we go over the green. If some reason we pull all the way back into this 9 EMA cloud on the weekly, or these levels that you see here on the downside, I do expect lower levels to be support until proven otherwise. So please listen to me. I don't just go long if price breaks above that neutral. I also look to go long at lower support levels, as you would expect. Okay, so these levels again are support until proven otherwise. But if I want to go short, I go short under the red line, place my stop where I'm comfortable, and then short that into the lower levels that I provided. Okay, now overall you can see here it looks a little bit more bullish than the Qs, right? So this doesn't look bad. It's just you need to note that the bears are in control with these topping wicks here. There's a lot of selling pressure. All right, so what do we want to do as far as the bigger picture? Let's go ahead and take a look. Put the DIA on here. And this is what I have, and this is what I worked up several weeks ago. We had a potential inside and up. I had trim or take profits in this area. Notice that we missed that probably by almost looks like $2 or so, and then we found the topping wick, and right now your support level comes in or around this 358.73 level. If for some reason we break down below there, we could see the Dow or the diamonds head back down towards that 350 level. All right, now keep in mind when earnings is around the corner, in most cases we pull the market back to create range. Okay, again, we're creating range into earnings. So if the market's at all-time highs or the ETFs are at highs, we want to see a pullback, and typically there's always some sort of thesis or some reasoning of why. That's not important to me. What's important to me is that we pull back into support, you identify that we're coming into earnings, and then you identify that resistance, you understand we're at support, and we get to trade that range that they created for us into earnings. All right, so that's what we're looking for starting this week. Let's go ahead and come over here into IWM. All right, so here's IWM. This is what we're looking at. This is my neutral. These are my lower targets here. Please identify those, and you can see that up here. We started with the inside and down, and now we're just kind of, this is IWM, right? I mean, sideways action. We're making higher highs and higher lows within a down range. So we're just choppy as we're slowly moving up, and it doesn't make it easy because it's very volatile. Notice here on the weekly, we are underneath the cloud again. So this cloud is resistance until proven otherwise. Notice here on the daily, okay, your next chart over, that this also is going to continue to be resistance until it's not. Notice how price pushes up towards the cloud and then right back down. That's exactly what I mean. You need to identify this and be able to basically toggle between different time frames to understand. Now, I will tell you a lot of these levels are for me going through all kinds of different time frames, supply and demand, resistance, support, trendy edges, all those good things to come up with this great blueprint. Now, over here on the right-hand side, let's go ahead and look at it on TradingView. Again, IWM, this is what we have. Potential inside and up. It's still, this green box is still potential support. Sure, it's volatile. It came right back into the green box. But as long as this holds, we could see basically sideways action into earnings and then move towards all the way up towards this 236 level. So I still believe in this as long as the green box is holding. All right, so we just went through SPY, Qs, DIA, and IWM. Overall sentiment, again, earnings are starting this week, so my overall sentiment is neutral. I'm looking for a little bit of support here. Let me go ahead and kind of tell you why. All right, so gold, all right, let's go ahead with gold. You can see here, I took a position. I sold 80% of it right here on the pop and still holding on to 20% of it. Quite some ways out. It's a longer term swing. I don't really want to be in this trade if it breaks down below 166.57 with lower lows. I'll just close it. It'd be a very small loss, and then I'll look at it later on, later on in the year. Okay, so gold is starting to pull back a little bit. Let's go ahead and just kind of open this up right here, and what really is getting my attention is the 10-year treasury. Okay, so the TNX, and you guys know I monitor this instrument, very, very important. What we want to see here is typically we just want it to kind of go sideways or just a tad bit down. So this has traders spooked a little bit, investors, I should say. But very, very important to note that on the weekly, this left chart here, this was your blueprint from several weeks ago as we pushed up into our targets. But if you look left, this is definitely and did come into resistance on Friday. Matter of fact, let's do this. I apologize. Let's pull up your trading view right here. That is not it. Oh, right there. Sorry. So let's make this a little bit bigger and let's pull up TNX. All right. So this is what it looks like. All right. Your resistance is at around 1.84. These arrows are basically what I'm looking for. So since the sentiment in the market, people seem a little spooked, I would expect maybe a little bit more volatility right into Monday and Tuesday. So perhaps a little move down. And then this TNX would spike a little bit, but then I would expect it to come back in. However, these levels here are very important. If the TNX stays in the red box, I'm staying cautious on longs. Okay. So let's go ahead and find those levels just really quick. So basically, if the TNX is staying above 1.78, and between 1.96, I'm pretty hands off and just specifically trading my trendy signals, keeping it very focused to just a few names, SPX, SPY, QQQ, things like that, okay? And leaving everything else to the side and just kind of managing or monitoring, okay? All right, let's go ahead and move on. So the next one we're going to look at is the dollar. Let's go ahead and pull this over here. All right, so here's a dollar. Not much to talk about. We're going to keep that same blueprint. All right, and everything's worked out just like we expected. We came up into our resistance or that T1. We pull back into the neutral box, and quite honestly, it's still a neutral. It's just an instrument that we watch. I would expect if the dollar cannot get itself over this neutral that we fade down towards the 94.7, which we could see a nice little rally in the market, perhaps. Okay. All right, the next thing that is very important is going to be your skew. Let's go ahead and pull this over. The skew is your hedge funds. It's pretty straightforward. I have some levels here that I went ahead and put on TradingView to make it a little bit less noisy. But basically, when the skew is at or above 145, it's risk off. It's dial it in, focus, and just understand that the hedge funds are basically looking at a possible standard 2 deviation. You could also couple this with your P call and also looking at fear and greed, and a lot of times these mesh up very, very well. In the background, what you're seeing is as we push up here, the market is moving down, but at some point it gets a little oversold, right? And things start to drop, and as they drop like they did here on Friday, we came in at around this level here, which is 139. So we're not totally in the clear, and that's what I'm seeing across the board. It's just very neutral right now, and because of that, I would expect choppiness. But if for some reason we get a little bit more of a sell off and the skew starts to drop below 130 to 125, I'm starting to look for calls 60 to 90 days out, or I'm simply biased to the long side and using my signals for intraday trading. Okay. So again, right now we're just kind of in the middle, neutral, not quite, do you need to be fearful, but also there's the potential of still a little bit of downside. Okay. So the next thing we're going to look at is going to be the VIX. Okay. And this is your volatility index. I keep it really simple. If price starts going over that 20.35, then again, that would be risk off, meaning, well, I shouldn't say risk off, okay? It just means we're going to get volatility in there. Matter of fact, what I would be looking at is what is your game plan, right? When I see the volatility index increase, I actually get excited as a trader because we could see some very big ranges, whether you trade to the upside or downside. What's important is that you have a plan on how to trade high volatility. And in many cases, the way that I like to approach it is I say this over and over. Smaller trades, wider stops, because volatility means that you have a lot of range expansion within names. You can't go into high volatility environments using the same sort of stops, because in most cases you'll get wicked out and then you'll see price go right back in the direction you want to see it. So again, for me, it's smaller trades, wider stops. All right. So the VIX volatility, it's in the box. And again, it's risk on as long as we're kind of holding down here towards 16, 17. But again, if we start to break over 20.35, then I would be a little bit cautious. We're very close. We pulled back a little bit, but we're still over 18. So again, this is a yellow flag. And once again, the keyword for this week, neutral. Okay. All right, so our next thing that I do want to go over are actually I'm going to do an extra video. But first I need your support. So if you would, please like this video, retweet it, go to YouTube, subscribe, like, and just let me know that you appreciate this broad market review. And doing that gives me the motivation to give you as much content as I can. What I'd like to do is provide you my Bitcoin outlook. It's been on par for the last 2 years. I want to continue providing that for you. And then I want to give you my overall market view. So last year we literally hit it almost to the point. I put it out in December of 2020 for the 2021 projection and literally got it almost right to a point. So I want to do that again for you. I've been working on that for the last 2 weeks. I'm very excited to share with you. But once again, I need you to hit that like. I need you to hit the retweet, subscribe to YouTube. There's some great content out there. And if you're interested in our community, please go to trendytrading.co. We have specials going on. You can check us out on a trial. And if you like what you see, you can stay and become a member. Thank you so much for your time. You guys have a beautiful Sunday, and we'll see you here soon. I can't wait to trade with you.